Hello, I'm Darren. This is the fight against poverty. Today is a special video. Today Nikita let an AI take over the channel and I will be voicing this video. Many times, many Americans lack understanding of the benefits of life insurance and the future it can financially secure for the insured beneficiaries. Life insurance covers all causes of death, with one main exception: suicide within the first 2 years of owning the policy. Apart from that exclusion, life insurance covers death from illness, disease, accidents, and homicide. There are two types of life insurance policies: term life insurance, permanent life insurance. Term life insurance is generally the most popular type of life insurance sold. Term life insurance provides coverage for a certain amount of time, and the premium payments stay the same amount for the duration of the policy. Typical choices are policy lengths are 10, 15, 20, 25, or 30 years. If you pass away within the term of your policy, your beneficiaries can make a claim and receive the death benefit money, tax-free. Once the term of the policy expires, you may be able to renew the coverage in increments of 1 year, known as guaranteed renewability. But each year of renewal will be at a higher rate. Permanent life insurance provides lifelong coverage. It's more expensive than term life because it can last for the duration of your life. Usually builds cash value. The cash value component accumulates on a tax-deferred basis over the life of the policy. It acts as a savings portion of the policy. Typically, you can borrow against the policy's cash value or make a withdrawal. If you decide to end the policy, you can get the cash value minus any surrender charge. In some policies, the cash value may build slowly over many years, so don't count on having access to a lot of cash value right away. Your policy illustration will show the projected cash value. There are several varieties of permanent life insurance. Whole life insurance offers a fixed death benefit and cash value component that grows at a guaranteed rate of return. Many whole life insurance policies pay out dividends that can be used to reduce premium payments or can add to your cash value. Universal life insurance often offers more flexibility than a whole life insurance policy. You may be able to alter your premium payments and death benefit within certain limits. With a universal life insurance policy, the cash value will build depending on the policy type. For example, an indexed universal life insurance policy will have cash value tied to an index such as the S&P 500. A variable universal life policy will typically have investment sub-accounts that you can choose and manage. Burial insurance is a small whole life policy with a small death benefit, often between $5,000 and $25,000. Burial insurance is designed to cover only funeral costs and final expenses. Survivorship life insurance, or second-to-die life insurance, insures two people under one policy, usually a married couple. When both spouses have passed away, the policy pays out the death benefit to the beneficiaries. Usually, survivorship life insurance is part of a larger financial plan to fund a trust or pay federal estate taxes. We've discussed the two types of life insurance policies there are. A person could ask, how can knowing about life insurance help reduce their chances of falling into poverty? Let's see what I can find online. According to an article on Business Insider titled, "Spending $75 a month on life insurance means I can stop the cycle of poverty my family's been in for generations." It reads as follows: when my grandmother died 10 years ago, I didn't even need to ask if she had a life insurance policy. I knew she didn't. Just like most other members of my family. My grandmother had no estate or assets. Since she left no surviving spouse or dependent child, the $255 death benefit that Social Security sometimes pays out wasn't even an option. She would be laid to rest in a cemetery plot where my grandfather had been buried 30 years before. My grandmother wanted to be buried too, not cremated. But since she died in a different state from where the cemetery was located, the cost to transport her body was way more than anyone could afford. So, despite her wishes otherwise, she was cremated for financial reasons. Only 2 of her 7 children were employed at the time. so they gathered whatever funds they could scrape together. And that, combined with the available credit they had on their credit cards, was just enough for the cremation and the cemetery's fee to open a hole big enough for us to place her ashes. There were no funeral services and no memorial event. The article continues. This situation isn't unusual in my family. Just last year, my aunt died in a similar financial state. It was pretty much the same story when my stepfather died 5 years ago, uninsured and with nothing in his bank account. I hail from a family where poverty traces back for generations. Many of my relatives have struggled just trying to afford food and shelter. Something like life insurance would be considered a luxury. And, like anything else not required for basic survival, would be low on the priority list. Family lore says that at least one of my ancestors was buried in New York City's Potter's Field, where the poor and unidentified are interred in mass graves. I and other family members have had to scramble to help pick up the financial pieces when some of our relatives have died without any insurance. Sometimes there wasn't even enough for an obituary. Watching this scenario play out repeatedly over the years taught me a valuable lesson. In death, as in life, your financial resources often determine your fate. I knew from a young age that I didn't want to be the cause of one of these post-death panics that send loved ones into a frantic scramble. As a result, I've had life insurance since I was in my early 20s because I've never wanted to leave anyone else in that position. Why I bought life insurance? I've seen experts and others share the opinion that life insurance isn't necessary if you don't have minor dependent children to support, but someone will still need to take care of your final arrangements. And I know from first-hand experience that even the most bare-bones, no-frills burial can be more expensive than you might expect. I'm guessing those experts likely don't hail from families like mine. They are perhaps taking it for granted that every deceased person has money in the bank or plenty of other assets that will cover burial and funeral expenses. Even if most people do in fact have sufficient assets at the moment to cover those costs, things can change. People may lose their jobs, get hit with major medical expenses, or otherwise face unexpected financial hardships. This is increasingly likely as they get older, particularly if they start having health issues. And the harsh reality of life insurance is that if you wait until a point when you think you may actually need it in the near future, it may be too late. In my recently deceased aunt's case, she did look into getting life insurance a few years ago, partly at the urging of her sister, who'd had to cover some of the expenses after their mother's death. Unfortunately, at that point she'd already had lung cancer and was in her 60s, so insurers weren't exactly eager to cover her, at least not without charging a fortune. A decent life insurance policy she could afford was virtually impossible to find. We all have a chance to prepare for the unexpected. Life insurance is a way to prepare and teach the following generation to better their chances from creating or continuing a cycle of poverty. I'm Darren, and this is the Fight Against Poverty. I had a great time going over life insurance and how it could prevent a cycle of poverty. Don't forget to like, comment, and subscribe to the Fight Against Poverty.